Hello everyone, welcome to EduTap and welcome to today's monthly revision session. So today we are going to revise the finance current affairs for the September 2025. So as you know that September 2025 is the most important month from the RBI Grade B 2025 examination point of view for the phase 1. And in today's session we are going to discuss and we are going to revise the finance current affairs from September 2025. Okay. So let's get started. First of all, do tell me if I'm clearly audible and visible. The voice is clear, I hope. So today we are going to discuss the MCQs and we are going to discuss the article from the finance current affair for the September 2025. Okay. So this month, September 2025 is very important from your examination point of view, and I hope you are preparing well, you are revising well, and through the MCQs today, we will see that how much you are able to remember from the finance current affairs and what are the important finance current affairs. Okay. So let's get started. Audible? Okay. Thank you for the confirmation. Now, let's start with the session, but before that, do subscribe to the YouTube channel of the EduTap so that you continue getting these videos, as well as do join our Telegram channel where you will get the PDF of the session, and the link for the Telegram channel is provided in the description box below. Okay. So first question is in front of you. Try to answer this question. Okay. So, the Investor Education and Protection Fund Authority under the Ministry of Corporate Affairs has launched Phase 2 of its financial literacy initiative Niveshak Didi, aimed at empowering the women through financial education. Which institution is a key partner in Phase 2 of the Niveshak Didi initiative for rural outreach? So, try to answer this question, that which institution? The Reserve Bank of India or India Post Payments Bank or SEBI or NPCI or India Postal Service, which institution is a key partner in the Phase 2 of Niveshak Didi initiative? So, it is IPPB, that is India Post Payment Bank is the key partner in phase 2 of the Niveshak Didi initiative. Okay. So this is the answer. So here you can see that the launch of Niveshak Didi phase 2 by IPFA and the India Post Payment Bank is going to partner with the IPFA. So IPFA has partnered with the India Post Payment Bank to use the rural network of the India Post Payment Bank to reach to the last mile for financial education and service delivery. Okay, IPFA has celebrated its 9th Foundation Day also, and during its celebration of its 9th Foundation Day, it announced the new program Niveshak Samadhan, Dial Your CEO, and introduced the Panch Tattva vision, that is faster refunds, AI-driven solutions under the Panch Tattva vision, and positioning IPFA as a trust anchor in the Indian financial ecosystem. So this is regarding the news article. Now, India Post Payment Bank, if we talk about India Post Payment Bank, that has celebrated its 8th Foundation Day on 1st September 2025, marking 8 years since its establishment in 2018. Over the years, the bank has successfully onboarded more than 12 crore customers. The India Post Payments Bank, it is a payments bank. That's why it cannot provide the loan. It can only take the demand deposits up to the limit of 2 lakh per customer, as well as it cannot has any subsidiary. It cannot have any subsidiary that can do the non-banking financial services. Okay, or the payment bank cannot have any subsidiary that can function as the non-banking financial company, as well as the payment bank's idea was proposed by Dr. Nachiket Moore committee. Okay. Now, coming to the next question, the Investor Education and Protection Fund Authority has proposed a simplified documentation for low value claims up to dash in demat security. So it has been said, or it has been proposed by IPFA, that there should be simplified documentation procedure for the low value claims if the claims are up to dash amount in demat securities. Okay. So if the claims regarding the demat securities are up to this amount, then there should be simplified documentation. Yes, the answer here is 15 lakh. So basically it has been proposed, the Investor Education and Protection Fund Authority has proposed simplified documentation for low value claims covering up to 5 lakh rupees in physical securities. So if the claims are up to 5 lakh rupees for physical securities, 15 lakh rupees for the demat securities, and 10,000 rupees for dividend. So in these cases, in these claim cases, there should be simplified documentation that should be there. Now coming to the next question, that the National Financing Reporting Authority has launched which nationwide outreach initiative aimed at improving audit quality and promoting sustainable audit practices? So try to answer this question. What should be the right answer of this question? So the nationwide outreach has been launched by the National Financing Reporting Authority, that is the authority that regulates the auditors in India. Okay, so basically it has launched creating a better financing reporting world. Okay, this is the outreach program. Yes, very good. So National Financing Reporting Authority has launched a nationwide outreach initiative titled Creating a Better Financial Reporting World to improve the audit quality and promote sustainable practices. Okay, as well as with the outreach program, it has also rolled out the first ever audit firms survey 2025. The initiative falls under the Ministry of Corporate Affairs, and the additional information about the National Financing Reporting Authority has been given. It was established in 2018. It regulates, or it provides the regulatory oversight over the auditors that audit the listed companies, unlisted companies with the paid up capital of greater than or equal to 500 crores, annual turnover of greater than or equal to 1000 crores. So basically the NFRA, the National Financing Reporting Authority, it provides the regulatory oversight. It provides the regulatory oversight over the auditors of these companies, Okay, this is the basic idea. Now, moving forward, the Department of Financial Services. Now, see, this is the additional information. So, if you are keeping this in mind, it is okay. If you are not keeping this in mind, that is also fine. The most important part, the news article part, is this, that the NFRA has launched a nationwide outreach. This is outreach that is having the title Creating a Better Financial Reporting World, and it has also rolled out the first ever audit firm survey 2025. This is the additional information. Just give it a read. That's it. Coming to the next question. So, the Department of Financial Services under the Ministry of Finance organized Public Sector Bank Manthan 2025. India is looking to scale up at least 2 public sector banks to become one of the top 20 banks in the world by 2047. So basically, the Department of Financial Services under the Ministry of Finance has organized the Public Sector Bank Manthan 2025, and India is looking to scale up and to expand at least 2 of its public sector banks to become one of the top 20 banks in the world by 2047. So here the answer is D, that is 20. Very good. So Department of Financial Services has organized the Manthan, Public Sector Bank Manthan, and it has been organized in 2025 after the 2022 PSB Manthan. The objective is to align public sector banks with the vision of Viksit Bharat 2047. So public sector banks are being aligned with the vision of Viksit Bharat 2047, and India is looking to scale up at least 2 public sector banks to become one of the top 20 banks in the world by 2047. The State Bank of India is currently ranked 43rd in asset size, that is in the top 50 banks. SDFC Bank, that is the private sector bank, it is ranked 73rd in the 100 largest banks at the global level. Coming to the next question, the Department of Financial Services under the Ministry of Finance organized PSB Manthan 2025. What is the objective of the PSB Manthan 2025 event? So here, what is the objective of the PSB Manthan, Public Sector Bank Manthan 2025? So the objective is to align public sector banks with the vision of Viksit Bharat 2047. This is the idea. Okay. Now coming to the additional information. So basically in 2019, the government decided to merge at least 10 public sector banks to create 4 large banks. Oriental Bank of Commerce and United Bank of India, they were merged with Punjab National Bank. Canara Bank and Syndicate Bank, they became the 4th largest lender, while Union Bank of India, Andhra Bank, Corporation Bank merger created the 5th largest public sector bank in India. So this is the additional information. Now the public sector undertakings have their public sector undertaking profit have surged to the net profit of 1.78 lakh crore in the financial year 2024-25. Okay, as well as the State Bank of India alone contributed over 40% of the total public sector undertaking bank earnings. Punjab National Bank reported the highest percentage growth in the net profits of 102%. So in the total share of profit, State Bank of India has the highest profit of 40%, highest share of profit of 40%, but the highest growth in the profit, net profit, is of Punjab National Bank. So highest growth in the profit is of Punjab National Bank, that is 102%. But highest share in the net profit is of State Bank of India. Now coming to the next question, the UPI-UPO integration has happened. So Unified Payment Interface of India has been integrated with the Universal Postal Union's interconnection platform. So this integration has happened, that was unveiled at the 28th Universal Postal Congress in Dubai. This integration aims to facilitate faster, safer, low-cost cross-border remittances. This aligns with the India's view that we have the commitment to the UN's Sustainable Development Goal of reducing the global remittance cost to below what? to below 3% by 2030. So basically, UPI-UPO integration has happened that will facilitate faster, safer and low-cost cross-border remittances, cross-border fund transfer using the postal network and digital payments. India views it as part of India's commitment to the UN Sustainable Development Goal of reducing the global remittance cost to below 3% by 2030. Because right now, if we want to send money outside or if we are getting the money from outside, so there is a lot of cost that is borne. Okay, the 5% of transaction cost, 7% of transaction cost, 10% of transaction cost. So that has to be reduced below 3% by 2030. That is the idea. So here you can see at the 28th Universal Postal Congress in Dubai, India unveiled the UPI-UPO integration, with the interconnection platform of the Universal Postal Union. So UPI has been integrated with the interconnection platform of the Universal Postal Union, and this initiative was jointly developed by Department of Post, NPCI International Payment Limited and the UPU, that is the Universal Postal Union. Okay, its primary goal is to enable faster, safer and low cost cross-border remittances, supporting the UN Sustainable Development Goal of reducing global remittances cost to below 3% by 2030. India has also announced its candidature for the UPU Council of Administration and Postal Operation Council, both headquartered in Bern, Switzerland, and both meet on the annual basis. The Universal Postal Congress, held every 4 years, is the supreme decision making. So this Universal Postal Congress that is held currently in Dubai. So Universal Postal Congress, this is held every 4 years, is the supreme decision making body of the UPU, bringing together 192 member countries to shape global postal policies and strategies. Coming to the next question, that which organization drives the account aggregator ecosystem in India? Account aggregators, they are the NBFCs that transfer the information from the financial information providers to financial information users with the consent of the customer, with the consent of the individual. Okay, so if I consent that okay, I want to take a loan from State Bank of India, that is the financial information user, my information will be used by State Bank of India basically. So I want to provide all the financial information from the other banks from in which I have deposits, from the other banks from which I have taken a loan and such. So if the information has to be transferred, so that can happen through the account aggregator. They can transfer the financial information from financial information providers to financial information users. So basically, yes, the answer here is Sehmati. So Sehmati organization, this drives the account aggregator ecosystem in India. So basically, Sehmati, the Industry Alliance for Account Aggregators, marked the 4th Account Aggregator Foundation Day, celebrating the progress since the RBI issued Master Directions in 2016 and the framework's official launch in 2021. So the account aggregator framework was officially launched in 2021. The account aggregator framework serves as the data exchange layer. As I've told you that account aggregator, the NBFCs, they exchange or they transfer the data. They transfer the data from the financial information providers to the financial information users with the consent of the customer. So that the customer, if it wants to take the loan from any bank, from State Bank of India, let's say, so easily the financial information of the customer can be transferred from the financial information providers to the financial information users. Next is Dash has received SEBI approval to launch a $1 billion initial public offering. So which entity, which stockbroker has got the approval from the SEBI to launch a $1 billion initial public offering? So it is Angel One, Grow, Zerodha, IND Money and CoinCDX. Which of these is the answer? It is Grow. Correct. Yes. So Grow has received SEBI approval to launch a $1 billion initial public offering. That is the right answer. Okay. So here you can see that Grow was founded in 2016. It is headquartered in Bangalore, has received the SEBI approval to do the initial public offering, that for the first time to the general public, to the general investors, the offer will happen of the shares of Grow. Okay, so Grow is doing the initial public offering. For the first time, its shares will be offered to the general public or general investors. So GROW has got the approval from SEBI to do the $1 billion initial public offering, expected to be the largest primary market fundraise by an Indian capital market. Now, the company GROW is India's largest stockbroker and most used mutual fund investment platform. It operates as a subsidiary of the Billion Brains Garage Ventures Private Limited, with JP Morgan Chase and Kotak Mahindra Bank appointed as lead managers for the IPO. The IPO follows GROW's 2024 re-domiciliation. So it GROW re-domiciled itself from US to India. Okay. And for the IPO, the lead managers of the IPO of GROW, the lead managers are JP Morgan and the Kotak Mahindra Bank. Okay. So this is the idea. Angel One is country's third largest broker by client base after unlisted broking firms Zerodha and GROW. Now coming to the next question. After discussion and deliberation in the SMAC, SEBI has decided to introduce an intraday monitoring framework at the entity level for index options, okay, or for the index future equivalent. So future equivalent is the options basically. Which of the following statements are incorrect in this regards that you have to tell me. So SEBI has taken the decision to introduce the intraday investment limit at the entity level for index option. Now, which of the following statement is incorrect that you have to tell me? Lead manager means they will be handling the IPO, the initiation of IPO, and they will be the ones that will handle the whole process of IPO for the GROW. Okay. So intraday net position limit for each entity shall be 5,000 crores. That is the net position limit on intraday basis. Intraday gross position limit is 10,000 crores. Okay, and so this is wrong. Intraday limits shall continue to be monitored by stock exchanges through a minimum of 4 random snapshots. 4 random snapshots will be taken during the trading day to see that the entities are following the limit or not, including one snapshot that has to be taken between 2:45 to 3:30 hours, that is around market closing time. So first and third are correct. Only the second statement was wrong. Okay. So here the answer here is 2 only, because incorrect statement. So only second one was the incorrect statement. So E is the right answer. So basically, based on the feedback from the market participants from the secondary market advisory committee, as well as consultation with the market infrastructure institutions like the stock exchanges, clearing corporation, depositories, the SEBI has taken the decision to introduce position limits for intraday index options. Okay. So basically, it was said that intraday net position limit for index options will be 5,000 crores. Intraday gross position limit for each entity shall be 10,000 crores. Okay, for index options. So this is the basic idea. Now it was said that 4 snapshots will be taken. 4 snapshots will be taken by stock exchanges to see that the limits are being followed or not. Okay, and 4 random snapshot with 1 snapshot between these hours. So this is it. So intraday net position limit for each entity is 5,000 crores for index option derivatives, and intraday gross position limit for each entity is 10,000 crores for index option. Now coming to the next news article. So try to answer this question. That is in regards to the amendment that has happened in the SEBI Real Estate Investment Trust and SEBI Infrastructure Investment Trust. So SEBI board approved amendments. So SEBI board has approved the amendments to the SEBI Real Estate Investment Trust regulations and the Infrastructure Investment Trust regulations. The proposals for the board were after due public consultations undertaken after the consultation paper was released and the feedback was taken. So basically the major amendments have happened. Which of the following statement is or are incorrect in regard to the amendments done by SEBI? So related parties of sponsor, investment manager, project manager, they shall not be considered as public unless these are qualified institutional buyers. Correct. So these related parties of the entities, they will not be considered public. But if they are the qualified institutional buyers, then they will be considered public. So this is correct. The negative net distributable cash flows, that is short flows, losses, that is with the holdco. So if the holdco is having the losses and such, that will be covered. That will be covered through the cash flows that are coming from the special purpose vehicle. So if holdco is under any loss and such, those losses, those shortfalls will be covered through the special purpose vehicle cash flows, and after that whatever money is there, that will flow to the REIT or InvIT after covering the losses or shortfalls in holdco after making appropriate disclosures. So holdco can get the money from special purpose vehicle for covering the losses after doing appropriate disclosures to the investors. This is the idea. Minimum allotment lot in the primary market for privately placed InvITs. So there are privately placed InvITs, that are the InvITs that are sold to a selected group of investors. So primary market for privately placed InvITs, the minimum lot size is now 25 lakhs, not 50 lakhs. So first is correct, second is also correct, third is wrong. So incorrect statement is E, that is 3 only. Got it? Only the third statement is wrong. First statement is correct, second statement is correct, only the third statement was wrong, and that's why the right answer is E here. Chalo. Now, SEBI's revised norms for infrastructure investment trust, we have discussed this, that the related parties can be considered public if they are qualified institutional buyers. Okay. As well as for the primary market, the reduction has happened in the minimum lot size. Before, the minimum lot size in the primary market was 1 crore or 25 crores. Now it has been reduced to 25 lakhs to align it with secondary market lot size. So now in the secondary market as well as in the primary market, in the privately placed InvIT category, 25 lakhs is the lot size. Now if you want to know more about these guidelines, if you want to understand about InvIT or REIT, if you want to understand about this holdco and such, so all of this I have taken a detailed session in YouTube, so you can see that session. Okay, so I've given you the basic details here. Now coming to the next one, insurance surety bond has issued for National Highway Authority of India. Contracts have crossed over 10,000 crore milestone. That's it. This is the basic idea. Like the bank guarantees, bank give guarantees. Okay, let's say National Highway Authority of India wants to construct a national highway. The contract is given to a contractor. Now what if there is performance criteria that are not being met by the contractor, or let's say the contractor is not finishing the project in time? So the authority can have the losses. So authority will ask the contractor to take the bank guarantee from the bank, so that if the National Highway Authority of India gets any losses because of the contractor, that can be covered by the bank. Okay, so contractor will pay a fees and will give a collateral, so that the bank can give the guarantee to the National Highway Authority of India. In the same manner, there is also the insurance surety bond, that rather than taking the bank guarantee, the contractors can take the insurance surety bond from the insurance company. So the insurance companies are giving the surety to the National Highway Authority of India, that if any mistake is done by the contractor, the terms and conditions are not followed by the contractor and such, in this case National Highway Authority of India will not face the losses. The losses will be covered by the insurance company. So this is insurance surety bond, where surety is given by the insurance company. Insurance company will take regular fees or premiums, okay, from the contractor for giving this surety to the authority. So insurance surety bond issued for the National Highway Authority of India have crossed the 10,000 crore milestone, and they are the financial guarantee by insurance companies, ensuring contractors meet the obligations without the need for collateral. And in this case, contractor just gives a fees or premiums. The contractor do not have to give any collateral. So this is the idea. So in the insurance surety bonds, there is no need to give any collateral, just premium or fees has to be given by the contractor, so that the insurance company can give the insurance surety bond to the National Highway Authority of India, can provide the surety. Coming to the next question, try to answer this question. So insurance surety bond, this is the surety that is provided to the authority, that if the contractor defaults, or if the contractor is not able to meet the performance criteria as per the terms and conditions, or is not able to meet the timeline, then the insurance company will cover the losses for the authority. Okay, and the insurance company provide the insurance surety bond for getting the regular premiums. Now coming to the question, Securities and Exchange Board of India has reclassified REITs from the hybrid securities to equity securities for mutual fund investments. Okay, maximum exit load from mutual funds reduced from 5% to what percentage? So when you leave a mutual fund, you have to pay. Like when an investor is leaving a mutual fund, is exiting a mutual fund, the investor has to pay the exit load, exit fee basically. So this exit fee is usually kept between 1 to 2%, but the maximum limit of the exit fee was kept at 5%. So maximum fee of exit load or exit fee for the investor was 5%. That has been reduced to 3% now, because usually in the market the exit fee or exit load is around 1 to 2%. Okay, so now this is the idea that the maximum exit fee or the maximum exit load that the investors have to pay when they are exiting the mutual fund, so that has been reduced from 5% to only 3%. So here the answer is 3. So SEBI has reclassified REITs. So see, basically REITs and InvITs, they are called as hybrid securities. Hybrid securities, that means they have the mixture of shares, units. Basically REITs and InvITs are selling the units, as well as they are also taking debt to do the investment. Okay, now it has been said that REITs, because they most of the REITs, they are selling the shares or they are selling the units, they do not get involved in the debt securities, they do not take much debt to do the investment. Even if they are taking the debt, but still their shares or the units that they are selling, they are getting the funds through that. So REITs are basically real estate investment trust. They are basically getting the funds by selling the units. Okay, by selling the units or by selling the shares or the units in the real estate investment trust. Okay, now they get the funds through the debt instrument also, but that is not much. So it has been said that the REIT will be classified as equity securities for the mutual fund, so that the mutual fund can invest more and more in the REITs. As the mutual fund has limitations that how much they can invest in the hybrid securities, so now REIT has been reclassified from the hybrid security to equity securities. So mutual fund can invest more in the REITs. Okay, thereby removing the limits on the mutual fund participation in the REITs, as the REITs have been reclassified from the hybrid securities to the equity securities. Okay, REITs and InvITs, they were introduced in India in 2014 and mutual fund participation in them was permitted since 2017. But adoption by the mutual fund was limited, as they were not able to invest much in the REIT and InvIT. Now REITs have been classified as equity securities, so InvITs will remain hybrid products only, because the InvITs, they are privately placed also. And they also do the debt securities. They also get engaged in the debt securities. They also provide a lot of debt securities and collect the funds through the debt securities. Okay, but the REITs, they usually get engaged in selling their units or we can say selling their shares, and they have very limited part or limited in debt securities. So that is the idea. Yes, InvITs are still hybrid, but REITs have been reclassified from the hybrid securities to equity securities. Now basically the SEBI has expanded the eligibility for strategic investors in public issues of REITs and InvITs. Now, qualified institutional buyers in the REITs and InvITs include public financial institutions, provident funds, PFRDA registered pension funds with a minimum 25 crore corpus, alternative investment fund, state industrial development corporation, family trust intermediaries with net worth of 500 crores or more. RBI registered NBFCs in middle, upper and top layers. To encourage mutual fund adoption, the SEBI has revised the exit load norms. The exit fee has been reduced from the maximum 5% to maximum 3% only. Okay, so this is the idea. As well as it has been said that additional commissions will be given for onboarding the women investors and incentives will be given for onboarding the investors from beyond top 30 cities. Okay, so this women investor or is onboarding a new investor from the B30 city, so there is the additional commission that will be given. Next is microfinance institutions. Microfinance institutions disbursements stood at 22,805 crores in Q1 of the recent financial year, reflecting a 24% decline that has been seen in the microfinance loans, okay, or disbursements as per microfinance institution network data. MFIN is the special regulatory self-regulatory organization in the microfinance segment. Okay, Chalo. Bihar had the largest outstanding portfolio of the microfinance, followed by Tamil Nadu and Uttar Pradesh, with Tamil Nadu showing the highest average loan per account ahead of the West Bengal. So this is the idea. Now coming to the next one, Swagat FI. So what does Swagat FI stand for? As proposed by the Securities and Exchange Board of India to simplify and unify the market access. So Swagat FI has been launched for simplifying and unifying the market access for low risk foreign investors, for the trusted foreign investors basically. So Swagat FI has been launched for trusted foreign investors. Okay. So here, single window automatic and generalized access for trusted foreign investors. Swagat FI is single window automatic and generalized access for trusted foreign investors. So a single window is being provided, a single window automatic and generalized access is being provided for trusted foreign investors. Okay. So SEBI has launched the Swagat FI. That is single window automatic and generalized access for trusted foreign investors. The trusted foreign investors will able to access the Indian financial market in a very easy manner. So Swagat FI framework aims to unify, streamline and standardize the access for select categories of foreign investors so that the trusted foreign investors can get the access to the Indian financial market in an easy manner. Now try to answer this. The SEBI board approved the introduction of single window automatic and generalized access for trusted foreign investors framework for foreign portfolio investors and foreign venture capital investors. Which of the following statements is or are correct in regards to the Swagat FI? So exemption has been provided from the foreign venture capital investor regulation requiring at least 66% investment in eligible unlisted assets. So this exemption has been provided, correct. Registration validity, KYC review and fee payment of $2,500 to be applicable for a 10-year block, not a 5-year block, instead of standard 3-year. So instead of standard 3-year, the registration will be applicable till 10-year or will be allowed till 10-year. Okay. Exemption from 50% aggregate contribution cap on the individuals that can invest in FPIs. So there is an exemption that is provided. This is correct. So second one was wrong. It should not be 5, it should be 10-year block. Okay. So here the answer is C, that is 1 and 3 are correct. Okay. So basically government and government related investors. So we have discussed about Swagat FI in a session in the Finance 360-degree session. So these are the trusted investors that can invest in the Indian financial market in a easier manner. They will be getting the access in the Indian financial market in a smoother manner. So government related investors, central banks, sovereign wealth fund, government wealth funds, the mutual funds and unit trusts that have the diversified investment and such. So these are the trusted foreign investors that will get the easy access to the Indian financial market, as well as they are provided with certain exemptions such as the FPI. If there is a entity, trusted foreign investor, that is registering as FPI, that can also, without any additional document, it can also register as foreign venture capital investor. Foreign venture capital investor that have to invest 66% of their investment in eligible unlisted assets. But for the trusted foreign investors, there is an exemption that is provided from this criteria. Okay. Registration validity is for the 10-year block rather than 3-year block. So for more time period, the registration validity is allowed. Okay. There is also the limit on the FPIs, that is the limit of investment that they can take from individuals is 50%. But there is an exemption that is provided from this limit so that the FPIs can take more investment from the individuals if these are the trusted foreign investors. Okay. So this is the idea. Now try to answer this question. In October 2025, the SEBI approved significant reforms aimed at simplifying the regulations for initial public offerings and enhancing the market participation. Which of the following is not one of the changes introduced by SEBI to encourage more institutional participation in IPOs? So basically, there are certain changes that has happened in the IPO norms. Which of the following is not one such change? That you have to tell me. So try to answer this. Life insurance companies and pension funds have been added to the anchor investor pool. So that means these institutions, will they be considered the anchor investors? So this is correct. Minimum allotment size for anchor investor has been reduced to 2 crore. No, minimum allotment size has not been reduced. Okay. Anchor investor reservation has been increased from 1/3 to 40%. So before 1/3 could be reserved, 1/3 of the IPO share could be reserved for the anchor investors. Now this lot size has been increased to 40%. Okay. Foreign portfolio investors regulations were revised to allow retail schemes in IFSCs if they have the Indian sponsor, to register as FPIs. So foreign portfolio investor regulation were revised to allow the retail schemes in the International Financial Service Center with the Indian sponsor to be registered as foreign portfolio investor. Okay, so that they can get the investment from the foreign investors also. The minimum public shareholding for companies with market capitalization above 1 crore. So if there is a company with market capitalization of above 1 lakh crore, so there is a minimum public shareholding relaxation that is provided. Okay, allowing. So basically, under the minimum public shareholding, a listed company that is listed in NSE or BSE under the SEBI, basically under the SEBI norms, under the minimum public shareholding, a listed company needs to provide 25%, at least 25% of its shareholding to the general public, to the general investors. Okay, so that is minimum public shareholding. That means at least 25% of the shareholding should be in the hands of general public or general investors in the market. Okay, so a listed company has to reach to 25% of the general public holding. So minimum public shareholding for companies, the minimum public shareholding norms for companies with market capitalization above 1 crore has been relaxed, allowing a 10-year timeline to reach 25% of the minimum public shareholding if the public shareholding at listing was below 15%. So all the other statements are correct, only the B statement was incorrect. Okay, so SEBI has approved major reforms in IPO regulations. Basically, relaxation is provided in the minimum public shareholding for large issuers. So minimum public shareholding is 25%. That means 25% of the shareholding should be in the hands of the general public, the general investors. Okay, if public shareholding at listing, while the IPO, the public shareholding is below 15%, so it must reach 15% in 5 years and 25% in 10 years. If 15% or more of listing is happening, then 25% has to be achieved in 5 years. Same rule applies to companies with market cap above 5 lakh crore also. So now it has been introduced for 1 lakh crore and above also. Anchor investors, life insurance companies, pension fund, they are added to anchor investor pool, as well as anchor reservation. Reservation of the IPO share has been increased from 1/3 to 40%. So for anchor investors now, the shares 40% of the IPO can be reserved. Okay, 40% of the IPO shares can be reserved. Minimum allotment size is now 5 crore. So this is the minimum allotment size. It is not 2 crore, it is 5 crore. Foreign portfolio investor reform. So retail schemes in IFSC with Indian sponsors, they are allowed to register as foreign portfolio investors so that they can get the investment from foreign portfolio investors. Okay, so this is the idea. Now moving forward, mutual fund incentives. So exit load has been reduced from 5% to 3%. Large value funds, minimum investment has been lowered from 70 to 25 crore. So these are some additional points. Coming to the next one, try to answer this. SEBI recently made changes to the eligibility norms for non-governmental organization wishing to raise funds through social stock exchange. So NGOs, non-governmental organizations that are working for providing education, free education, or providing healthcare facilities, or for clean Ganga, or for clean water, sanitation facilities, or for-profit organization that are trying to provide affordable education, affordable healthcare benefits and such. So these entities that are working for the societal benefit, or that are working for such projects that are benefiting the society, they can raise the funds through the social stock exchange. Okay, so now it has been said that the NPOs, the not-for-profit organization, they must provide non-financial and governance disclosures within how many days of the end of the financial year. So once financial year 2024-25 ended, within how many days the disclosures were done, non-financial and governance disclosures. So anyone who can answer this? Within? Yes, very good. Within 60 days. Yes, within 60 days of financial year end. Okay, so D is the right answer. Very good. Mayank, Guru Raja, Bineet, very good. So SEBI expanded the eligibility criteria for not-for-profit organization to raise funds through the social stock exchange. So SEBI has expanded the eligibility criteria for not-profit organizations. Okay, now includes not-profit organization that are listed on the social stock exchange that can raise funds through the social stock exchange now includes trust registered under Indian Registration Act 1908, charitable societies, as well as State Societies Registration Act. Okay, so this is the idea that basically the eligibility has been expanded for the NPOs, not for profit organization, for SSC listing. Now includes these entities, as well as eligibility norms relaxed for NPOs. They do not need to invest a fixed percentage in the prescribed list of activities. Okay, annual impact report has to be submitted by the not-for-profit organizations. So annual impact report to be self-reported by the NPOs not listing any security. If they are not listing any security on the social stock exchange, that means if the NPO basically is registered with the social stock exchange but not raising the funds through the social stock exchange currently, so they can provide the annual impact report on their own means or as per their own timeline. So NPO that is not raising fund through the social stock exchange, they are just registered with the social stock exchange, so they do not the annual impact report has to be self-reported by the NPO, not listing any security. For listed securities, that means NPOs that are listing their securities and that are raising the funds through the social stock exchange, so they need to provide the annual impact report that must cover at least 67% of program expenditure, that where they have spent the money that they have raised, so that has to be informed. Okay, so this is the basic idea. Now disclosure timelines: non-financial governance disclosure within 60 days of the end of the financial year, financial disclosure by October 31st, or income tax return due date, whichever is later. Okay, so this is the basic idea, as well as social impact assessment provisions. So the annual impact report that is provided by the not-for-profit organization that is raising the funds through the social stock exchange or that is registered with the social stock exchange, so annual impact report to be assessed by social impact assessors that have the experience of 3 years, at least 2 full-time social impact assessors. They should assess the social impact that is created by the NPOs and such. So the not-for-profit organization that is submitting their annual impact report, what is the impact that they have created in the society, at least 2 full-time social impact assessors so should assess the impact created by the NPOs, and they must have the minimum experience of 3 years. That is the idea. So this is the basic idea about the NPOs. So NPOs, not-for-profit organization, they can raise the funds through the investors under the social stock exchange, and if they are raising funds from the investors, they also have to inform that where they are investing the funds through the annual impact report. They have to also inform that what is the impact that they have created. If there is a not-for-profit organization that has not raised the funds through the social stock exchange but is registered with the social stock exchange, that can provide a self-report annual impact report. Okay, so this is the idea. Now coming to the next question. No, you don't have to remember this. And registered social enterprises, as I've told you that there are certain NPOs that are registered with social stock exchange but that have not listed any security or that have not raised the funds through the social stock exchange. So the registered social enterprises, they must raise funds through social stock exchange within 2 years of registration. Within 2 years of registration. Okay. In 2025, SEBI amended the custodian regulations to strengthen risk management systems. The minimum net worth requirement for custodians has been increased to dash crores. So try to answer this question. Here I am getting the answer C, absolutely correct. See, custodians are the ones that take care of the financial, custodians are financial institutions that securely safeguard financial asset like securities on behalf of their clients. The clients can be foreign institutional investors or the clients can be mutual funds. Now the mutual funds and the financial institutional investors, they are investing in large number of debt securities, they are investing in large number of shares, equity securities and such. Now if they are investing in such large number of securities, to safeguard the financial asset of these entities, there are custodians, that are the financial institutions. SEBI has amended this custodian regulation, increasing the minimum net worth requirement for custodians to 75 crore to strengthen the risk management system. It has also been said that the term physical has been inserted before securities and computer. So basically the physical securities also have to be taken care of and safeguarded by the custodians for their clients to explicitly cover the physical custody of the physical securities. Existing custodians, they are given a 3-year timeline to comply with the revised net worth requirement. Custodians must ensure that all the directors, key management personnel, they are following the fit and proper criteria. Now coming to the next one, which organization is developing the centralized digital credit infrastructure to provide end-to-end automated credit delivery for the regional rural banks? Is it Ministry of Rural Development, Reserve Bank of India, NABARD, NPCI or Indian Banks Association? So this we have discussed in Finance 360-degree session also, so try to answer this. Yes, it is NABARD. So NABARD is the organization that is developing or that has developed the centralized digital credit infrastructure to provide end-to-end automated credit delivery process for the regional rural banks, okay, so that the RRBs, they can compete with non-banking financial companies, microfinance institutions, okay, so that the RRBs can compete with the microfinance institutions. So the NABARD has developed the centralized digital credit infrastructure for the RRBs so that the RRBs can provide end-to-end automated credit to their customers. So here National Bank for Agriculture and Rural Development is developing the CDCI, that is the centralized digital credit infrastructure to provide end-to-end automated credit delivery so that the RRBs can do the end-to-end automated credit delivery and improve competitiveness against the NBFC microfinance institution. The initiative follows the one state, one RRB policy where the 43 RRBs, they were merged and only 28 RRBs were left, okay, so one state, one RRB. So this is the basic idea that now the RRBs, they were established in 1975, aim to expand the rural credit alongside cooperatives. Their shareholding structure is Government of India owns 50% in the RRBs, 15% is owned by state government and sponsor bank owns 35%. Now the NABARD has developed the CDCI. This is the platform so that the RRBs can provide the automated credit or the credit delivery can be faster and through the automated process. As of March 2025, RRBs reported 7,13,790 crore in deposits that has increased. So the deposits have increased with the RRBs by 8.2% and 5,26,829 crores in loan outstanding as of March 2025. So the loan outstanding or the loans with RRBs have increased by 12.1%. Okay. Now, which bank launched the e-rupee person-to-person digital gifting feature on its UPI app, allowing customers to send purpose-specific prepaid vouchers? Try to answer this. If it is in news beneath, then it can come. Yes, Bank of Baroda is the one. Through its UPI app, it has launched the e-rupee. It has launched the e-rupee through its UPI app. So basically, Bank of Baroda has launched e-rupee person-to-person digital gifting on its Bank of Baroda e-Pay UPI app, becoming the first bank in India to offer this kind of feature. Now, e-rupee, I hope you know that e-rupee is basically a digital voucher which a beneficiary gets on his phone in the form of an SMS or QR code. Now, the e-rupee, it is purpose specific or they are person specific. That means, let's say e-rupee voucher is given to the farmers for the fertilizer. So through this e-rupee voucher, they can only buy the fertilizers, like the vouchers are being given to you. That is for a specific purpose. So e-rupee, it is kind of the voucher that is for a specific purpose, and e-rupee is being developed so that the government can use it for giving the subsidies or for giving the direct benefit transfer and such. So e-rupee, they are basically a digital voucher which a beneficiary gets on the phone in the form of SMS or QR code. It is prepaid voucher prepaid by your friend, by some person, by some entity, by government or by corporate, which he or she can go and redeem it at any center that accepts it. So it can be, if it is for fertilizer, you can go to the fertilizer store to get the fertilizer. Okay. Now the feature is empowered by NPCI's e-rupee platform developed by NPCI. Customers can gift purpose specific prepaid vouchers. Let's say I want to give a voucher for my brother for a restaurant so that he can go and eat. So I will give him the e-rupee voucher for the restaurant so that he can go and eat and do not waste that money at some place else. Okay. So this is the idea that for specific goods and services, the purpose specific e-rupee voucher can be used. Vouchers can range from 1 rupee to 10,000 rupees and are interoperable across all UPI platforms. So basically now transaction limit, government schemes maximum 1 lakh per voucher. Private entities can provide maximum 10,000 per voucher. Redemption is allowed at UPI enabled merchant points. Now, the banking system's liquidity deficit. So, banking system is in the liquidity deficit. They have less liquidity. This has widened to 87,183 crore as of September 23, 2025 after being in surplus since March 2025. Okay. So, in response to the RBI conducted an overnight, that is 1 day variable rate repo auction worth this much to address the liquidity deficit. Okay. So, this is the idea. So, basically variable rate repo means repo is the operation through which RBI provides the loan to the banks. So RBI is providing money to the banks so that the banks can have the money and their money supply can be sufficient. Okay, can be sufficient. Now the RBI has done the overnight, that is for 1 day, the variable repo rate. Variable repo rate means immediately the repo operation was conducted where the RBI provided the loan or money to the bank so that their deficit in the liquidity that can be covered. Now coming to the next question. In 2025, which bank was granted RBI approval to act as an agency bank for GST collections, becoming the only wholly owned subsidiary in India with this authorization? So I'm getting the answer D, and that is absolutely correct. The DBS Bank India has been granted the RBI approval to act as an agency bank so that it can collect the goods and services tax on behalf of the government. Okay, so DBS Bank in India has received the RBI approval to act as an agency bank for goods and services tax collections on behalf of the government. GST payments can now be made through DBS Ideal, the bank's enterprise digital banking platform. Since GST's launch in 2017, registered taxpayers have increased from 60 lakh to 1.51 crore, significantly formalizing India's economy. DBS has been ranked Asia's safest bank by Global Finance for 16 consecutive years and was named Best Digital Bank for MSMEs, for small and medium enterprises, for SMEs in India by Euromoney. In 2025, DBS Bank India also won multiple awards from CRISIL Coalition Greenwich, including Best Bank for Corporate Banking. So multiple awards have been won. Okay, but this is important that it is considered Asia's safest bank and Best Digital Bank for small and medium enterprises in India, as well as Aditya Birla Capital Digital Limited. It has received in principle approval, that is for the time being it has received the approval under the payments and settlement system to operate as online payment aggregator. I have taken a detailed session on payment aggregator. They are the ones that facilitate the transactions between the merchant and the customer. Okay, PhonePe, backed by Walmart, has received the RBI online payment aggregator license, enabling it to expand the small and medium enterprise focused merchant services, and it can provide the services to the merchant so that the merchant can receive the money from the customers. Okay, now coming to the next question. Which company was granted third-party application provider approval by the NPCI to offer UPI services in partnership with banks like Google Pay, PhonePe? They are the third-party application provider that provides the application so that the UPI transactions can happen, and the transactions can happen through the UPI system. So now which company has been granted the third-party application provider approval? So it is Viona Fintech. Viona Fintech is the company that has been granted third-party application provider approval so that it can enable the UPI services in partnership with the banks, and it can provide the UPI services in partnership with banks. So NPCI has sought approval from RBI to enable UPI based cash withdrawals up to 10,000 rupees at the business correspondent outlets at the agent outlets of the bank. So currently if you go to ATM, you can just scan the code and through your UPI you can do the cash withdrawal up to the limit of 1,000 rupees or 2,000 rupees. Okay, but now it has been said that through the business correspondent, because the bank branches are not available in all the villages in the different regions, but the business correspondents, the agents of the banks, they are present in different areas, in the far off areas also. The kirana store and the shopkeepers, they can also provide the business correspondent facilities on behalf of the bank. The business correspondents can provide the basic banking facilities. So it has been said that using the UPI, NPCI has requested the RBI approval that using the UPI cash withdrawal to be allowed up to 10,000 from at the business correspondent outlets. Okay. Now UPI accounts for 85% of India's digital payments and nearly 50% of global real-time digital transactions. So this is very, very important. Very, very important. Any confusion, anyone till now? Coming to the last question for today, try to answer this question. And if there is any confusion, any question anyone has, they can ask. So which of the following is the world's first and largest unified digital insurance marketplace launched by the IRDI, Insurance Regulatory and Development Authority of India? So basically, Bima Trinity has Bima Sugam, Bima Vahak and Bima Vistar. Like there is Amazon. You are going to the Amazon marketplace or you are going to the Amazon e-commerce website, and through that you are buying whatever you want to buy. You want to buy clothes from a particular brand, you are buying that cloth, you are making the payment and you are getting the delivery of the cloth. So this is the e-commerce website that is providing you what you require. Similarly, Bima Sugam is the website or is the platform where it is the marketplace for the insurance products. Health insurance, car insurance, motor insurance, if you want to have the life insurance, if you want to have the fire insurance, if you want to have different kind of insurance, all the insurance provided by different companies. You can see here, you can compare here. So the Bima Sugam is the marketplace for the insurance. You want to buy different insurance from various companies to compare from, various prices you can see, and you can buy the best insurance for yourself or the best different kind of insurance for yourself. So the Bima Sugam is the world's first and largest unified digital insurance marketplace, which is providing you the insurance insurance products from the different companies. So from different companies you can see the insurance products at one place. For different insurance products you can see at one place and you can compare them, you can buy them whichever you want. Launched by the Insurance Regulatory and Development Authority of India. So it is Bima Sugam. Yes, very good. So basically the IRDI has launched the official Bima Sugam website implemented through Bima Sugam Indian Federation and backed by the Life and General Insurance Council. Very, very important. It is backed by Bima Sugam website has been implemented through Bima Sugam Indian Federation and it is backed by Life and General Insurance. It is world's first and largest unified digital insurance marketplace integrating life, health, motor, travel, property, agriculture, general insurance. So all these insurance you can get at one place from different companies. You can compare and you can buy. Its vision, the IRDI vision is to have the insurance for all by 2047. Bima Trinity consists of Bima Sugam, Bima Vistar. Bima Vistar, this is a insurance product that is provided to low income group. So for low income group, Bima Vistar is the insurance product that can provide the insurance at very cheap rate. So this is for the low income group. Okay, so for the low income group there is a composite insurance product through the Bima Vistar at very, very cheap rate. The basic insurance product is provided. Bima Vahak, this is women led rural outreach force to make the public more aware about the insurance products. Now coming to the last slide. So the important details have been given here. UPI has achieved a historic milestone in August 2025, crossing 20.01 billion transactions for the first time as per the data provided by NPCI. This represented a 34% year-on-year growth compared to 14.9 billion transactions in August 2024. With the transaction value, now this is the volume of transactions, with the transaction value rising by 24% to 24.85 lakh crore. SBI has emerged as the top UPI remitter bank that is providing the money. So the most money that has been sent through the SBI. Okay. Yes Bank as the top UPI beneficiary. So Yes Bank has become the top UPI beneficiary that has received the most of the money under the UPI. Okay. So this is the basic idea. So Yes Bank as the top UPI beneficiary. So SBI has emerged as the top UPI like money sender. Most of the money has been sent through the SBI, and Yes Bank as the top UPI beneficiary. Maharashtra led in overall state-wise UPI usage. Uttar Pradesh stood out as the only northern state in the top 5 UPI users. Public sector banks dominate sending side. Private sector banks they lead in receiving the money. UPI has gone live in Qatar, enabling Indian travelers to make cashless payments at Qatar duty-free stores at Hamad Airport. Qatar Duty Free is the first merchant in Qatar to accept QR code-based UPI transactions, facilitated through collaboration between NPCI International Payments Limited (NIPL) and Qatar National Bank and NetStars Japan. Qatar joins 7 other countries: Bhutan, France, Mauritius, Nepal, Singapore, Sri Lanka, and the UAE, where UPI is already active for Indian travelers, as well as Trinidad and Tobago has also said that they are going to use the UPI. Okay. So this is the idea. Now, any confusion anyone has? Ask your query if there is any confusion. Trinidad and Tobago, they have accepted UPI, but they have not actively started using UPI. Okay. So active for Indian travelers. So Trinidad and Tobago, if we see in the acceptance category, they have accepted to use the UPI, but they have not established the means to start using it. Okay. Got it? Beneath. Any confusion anyone now? Chalo. Today I had the session since morning, so I was not able to make many of the questions, but I tried to bring the material in this form so that at least you are getting the material. Okay. But any confusion anyone has now? So I try to bring the material and try to make as much questions as I can make, but I have provided you the material so that you can study from. Okay. Chalo. Any confusion anyone? Shall I close the session now? No confusion, no query, no one. Okay. Now, if you want to practice more and more questions, okay, let me show you. So basically, if you want to practice more and more questions, you can go to edutap.in, and here you can see in the courses section, RBI Grade B courses, where you can see that there is the test series that we have launched. Okay, that is the ultimate current affairs test series. So in the single courses, you can see that there is the ultimate current affairs test series that has been launched for all of you, where you are getting 2400 plus MCQs for the RBI Grade B Phase 1. You are getting these current affairs booster magazines for your revision, for your rapid revision, and you are getting current affairs mock test with 2400 plus MCQs. So if you want to practice a lot of MCQs, this is only for the students that have not that do not have the gold course or silver course or crash course. If you already have any of these courses, do not buy this test series. But if you do not have the gold course, crash course of our EduTap, then you can buy this ultimate current affairs test series if you want to practice a lot of MCQs. Okay, so here you have 2400 plus questions, MCQs, with the booster document also. So this is the idea. As well as if you are sure about phase 1 and want to see the sessions and courses for phase 2, that also you can see. Okay, and right now the price for Ultimate Current Affairs Test Series, this has been reduced from 1299 to 999. So you can understand that the prices have been reduced massively so that most of the students can take the benefit of this test series. So if you want to solve a lot of questions, then you can take this test series. So this is it. Thank you everyone.